All right, as we were mentioning right before we went to break, Julie and I, we are joined by James Keegan, and we were talking bonds, and
we were talking the
yes.
auction.
Yeah.
And so the question I posed to you just as the president began speaking, where does the hunger for these auctions end, or does it end? I mean, what would stop it?
I think at this point, there's a tug of war in the markets between record supply, deficits as far as the eye can see, but on the other hand, a very challenged economy, and we would argue a very weak economy. And right now, and we believe it's right, the upper hand of the weak economy is dominating the record supply and deficits.
And is there something that's going to tip that balance?
I think we need to see sustainable organic growth in the economy, and I think we're a ways away from that.
Well, and that's sort of reflected as well. We had a story on the Bloomberg terminal today about volatility in Treasuries, the lowest in almost 2 years. And that also seems to reinforce what you're saying, that the bond market kind of, as far as the eye can see, expects it to be a similar trend.
Yeah. I think what you're seeing is, I think it's all about the consumer. And the consumer is very weak right now, very challenged. The consumer is in the process of a very necessary deleveraging process. It needs to repair its balance sheet. So I think you're going to see less consumption, more savings, more regulation, higher taxes, and as a result, we see the economy in an extended period of below-trend growth.
Well, you also point out you believe that consumers at this point, I guess given the economic data and the metrics, they believe that they can't spend their way out of prosperity.
Can't spend their way to prosperity.
To prosperity, excuse me.
Or borrow their way to prosperity.
Yeah.
I think they've realized that, what they've done is borrowed a lot of money to consume, to finance a lifestyle that really they can't afford. And by definition, when you consume, what you consume is gone, but the debt that you use to finance that consumption remains, and you have to pay it off.
Does this mean that especially short-term treasuries are going to be attractive for the near future, continue to be attractive?
We believe so. We believe the Federal Reserve has made it very clear that they're on hold for an extended period of time. The next thing that we can expect, and we think it's a ways away, is that maybe they nuance the language of the FOMC statement. But for now, we believe the Fed is on hold through 2010.
At what point through 2010? Third quarter, maybe?
We actually think they're going to stay on hold for all of 2010.
Really?
Yeah.
And that is by, as you mentioned, the nuances that you've been seeing in these FOMC statements?
Well, no. We believe that the next step that the FOMC will trigger to the market will be a nuance changed in the language. Will
the market understand it? Well, is that what the market's going to be looking for at this point?
I think so. Yeah, I think so. I don't know if it's at this meeting, but the government buyback programs of mortgages and treasuries, as they wind down, we believe that the statement will be nuanced to give the hawks on the FOMC something.
At the same time, of course, you look at the whole bond universe, not just looking at treasuries right now, also corporates you're finding attractive at the moment, even though we have seen sort of a big correction, you could say, in the corporate bond market. So where are you seeing opportunity?
Well, we're seeing opportunities in the defensive parts of the corporate bond market. So we're focused on industries and companies that serve what consumers need rather than what they want. Because, as I said, our big premise right now is that the consumer is retrenching, and that's a secular change, not a cyclical change.
Okay, Jim, unfortunately, we're out of time, but thank you very much for coming in and joining us.